Hello, welcome back to WINFX Trading YouTube channel, the only channel that has been optimized to make you rich trading the Forex synthetic market. If this is your first time of visiting this YouTube channel, do your best to subscribe and turn on the bell notification so you get notified each time I upload a new content. Try to like and refer this channel to your network so that YouTube push us to a high level of audience. I've discovered that a lot of people we are going beyond 99.99% losers in the Forex synthetic market. When I say 99.99%, it means that there is probability that all traders are losers. But the reason why WINFX Trading Channel existed is to solve the problem of marginalities among traders that lead into losses. So what I'm doing in this channel is to actually optimize. It's more of optimization of profitable traders, like putting it to a range of 50 to 70% profit or gainers, like profit takers or gainers. You see, you really need to understand the objective of WINFX trading, and so it is a very big task, but we make it so easy, meaning that you should not take this channel for granted, including the product and services offered by this channel. Once you miss this opportunity, to be like missing the era of Bitcoin. Okay, so a lot of people are still losing money, like 99.99%, meaning that all traders are just losing money. And if you watch this video to the very end, you will understand the power of this topic to helping you to become a successful trader. So the topic is vector algebra applied to Forex synthetic finance market. You see, trading is more of knowing directions, right? But the directions changes at a very fast rate based on volatility. So there are two major directions in the market: the buy direction, the sell direction, the up direction, or the down direction. Okay, so if we are going to study this mathematically, we can represent the up direction with y-axis, or with a line segment pointing at a positive angle to the horizontal. Okay, so this is the y-axis. Okay, this is the y-axis. So this is the y-axis, and this is the s-axis. Okay, this s-axis can be labeled as, we can replace it with time, and this is the price axis. Okay, or the y-axis. So we have y, so this is also s, or time axis. Okay, now if we have a line segment pointing like this, so this is buy direction, this is up direction at certain angle to the horizontal, let's call it theta. And then we can also have another direction, like if we rotate this line segment so that the slope of this line is negative. One of the ways to rotate this line segment so that the slope is negative is by intersecting another line segment at angle of 90 degrees to this one. So we have another line segment at angle of 90 degrees, but is inclining to the horizontal, like the inclination to the horizontal is maybe alpha, but the slope is negative. Okay, so we have this. Okay, So this one is pointing downward. So in a simple term, we can now have a general buy, like the buy and sell happen at a point. So if we localize a point in the space, which is the trading chart, we can have a line that is going upwards, that is going up, coming to us, leaving this point, so it's going up like this, or another point that is going like this, another line that is going like this, and then that they meet at angle of 90 degrees. Okay, but this event, this is B, buy event, buy signal, buy function, and this is sell function. Okay, there are functions of price and time, okay, and people psychology. We can allow this to be inside a parallel channel, or in, let's say, bounded by parallel lines. Okay, so we can have a line. Let's extend this to the upside, so we can have a line like this. So this point is where you are observing this point, but there is probability that price will take this path or it will take this path, but within a fixed channel, a parallel banded twin lines or channel. Okay, you can see that these lines are parallel, this line is parallel, but the buy function and the sell function are not necessarily going to be parallel to this channel. This channel is the boundary condition of this market. Okay, like is the extreme of the market, or is the boundaries of the market. It is assumed that the buy function and the sell function cannot escape this channel. They are restricted within this channel to behave and, you know, do whatever they wish to do. So this is the basic model of vector algebra. Like this is the basic idea of vector algebra applied to Forex synthetic market. Now, if we now want to go deep into this idea, given a point here, we can have a buy function B and a sell function at 90 degrees S. Then we can have other point interacting with this. Like this is called reference point. We are observing this, but we are observing this point, but there are other points within that our channel of interest, like within the analytical channel, because like within the zero differential analytical channel, because this zero differential analytical channel is in such a way that no candlestick will exist or be active outside these boundaries, meaning that the energy content, all the energy content of this boundary is winning. Outside is zero energy, meaning that there is no trading activity outside this boundary. Okay, so we have points within this boundary where buyers and sellers are trying to make decisions. Okay, so every point on the chart constitute buy function and sell function interacting at angle of 90 degrees, trying to win. Like who is going to win, whether the buyers is going to win to push the market in a positive slope, or the sellers will win to push the market in a negative sloping direction. Okay, so with this battle, you will now know that as a trader, whether scalping or day trading or swinger or positional trader, you have to be serious with taking your profit and getting the right entry, because if the length output of this function is going to end up here and you are entering it near here, you know that another sell function is going to start to push the market downwards, so you will now lose that trade. Okay, though there are functions that are very, very lengthy, their length output is very, very long, that anywhere you enter you still make it, but before you can get to that level where you can just enter market anyhow, then you must have big capital, because drawdowns or counter functions or counter signals must create. And even though they are short-lived, like they have deadline, like these are called retracement, they have deadline. Most time, if you don't have peak equity and your stop loss is tight, that trade, that your open position is going to be liquidated. Okay, your stop loss is going to be hit. Okay, so in mathematical time, at any point A, we have two functions interacting, buy and sell function interacting. Okay, buy and sell function interacting. So when I say vector algebra, okay, vector means I have not actually explained the meaning of this. Vector means direction of a physical quantity and the magnitude. When you know the magnitude and direction of a physical quantity, so when you pay attention on the direction, that is vector. The magnitude is not much more important for the direction. So when I say the magnitude, we are not pretty much considering the exchange rate, like what will be the value of the exchange rate at any particular point in time, but you are pretty much focused on the direction of that exchange rate. Okay, though the quantity is needed if you really want to make profit, so you can actually understood the meaning of vector, because it means science of magnitudes of quantity and the direction. So it have to do with magnitude and direction. But why I want to pay less attention to the magnitude and focus on direction is because in trading, what matters is direction. Even if you can accurately predict 1 pip or 2 pip or 3 pip and you have enough capital, you just make profits. Okay, so that's the direction matters a lot, because you'll be like, oh, the exchange rate is going to go by 10 pips, and then you forget to understand that this 10 pip could be in the opposite direction, and then you lose that trade. Okay, so in as much as you'll be considering the magnitude of the exchange rate, the pip difference, the amount of pip you are going to generate, also know that the direction is the most important thing. And if you predict the right direction, you are not trading with massive profit, because if you trade and the market go in opposite direction, it means that the energy content of your signal is zero, because the signal you predicted actually go in opposite direction. So it's like you want to go, let's say you want to take a flight from South Africa to Dubai. Okay, so let's assume that we have our north, and this is our south, and this is our east, and this is our west. So if Dubai is located at this spot, and South Africa, South Africa is located here, and Dubai is located northeast somewhere here. This is Dubai. If an airplane, let's represent this with airplane. Let's represent this with airplane. If an airplane start moving in this direction, like flying to the southwest, you see that the energy content of that movement will be maximum or infinity in this southwest direction than it will be in this northeast direction. You will lose two things. You will not be able to get to Dubai, and you waste your energy in the wrong direction. That's what I'm trying to say. Okay, so that's good. This is a complicated subject, but I'll just go straight to the chart and show you some things so that you will appreciate the application of vector algebra in this trading of a thing. Okay, right here we are on volatility. Another one is after this I'm gonna check the Forex asset as well, or good USD, 𝒓𝒊𝒔𝒑, so that we can be able to get the real fact here. This is, we are going to be using a very regular time frame that you can be able to view the market appropriately. So we'll be using the 15 minutes time frame. We'll be using the 15 minutes time frame. Okay, now we have to define our analytical channel, a channel in which the energy is zero outside and energy is infinity inside. Simple. Okay, so we define this channel here. We have, make sure you define the channel, because I think I'm going to use a limited trend line so that it will not extend so much. Okay, yeah, so I'm going to define a channel of this farm, making sure that there is no candle outside that channel. Okay, channels are parallel, they have parallel boundaries. The boundaries, the external boundaries, the extreme boundaries are parallel to each other. So this is a hypothetical channel. So I'm going to I'm going to have this. Okay, so we are going to analyze this market within this hypothetical analytical channel, but I don't want to call it hypothetical because this is real. This is not hypothetical. So this is a practical analytical channel. Okay, so it is an analytical channel, meaning that we use it to get the true reality, the truth or the reality of this market. All right. Okay, so this is our analytical channel, and the slope of this channel is upwards, right? So I'm now into the vector algebra analysis. Is upward. That's the slope of this channel is upward. Then let's pick a swing point. So we have a swing point here. So these are points. So all those points I was mentioning are swing, because price will create output waves, whether up or down, at those points. So there are those points that were localized within this practical analytical channel. Okay, you can see it were those points I was talking about. Okay, those points, but there are swings here. There are swings. Okay, there are swings, or they can be fractals. If you use fractal indicator, you can actually use it to localize them. Okay, so I'm going to pick one of these points. I'm going to pick this one. So there is a direction going like this. Are you seeing it? And line of best fit, that those directions should be line of best fit. You just get the midpoint of the movement. So we have another one, and then they intersect. So this angle, we have to believe that this angle of intersection is approximately 98 degrees. Okay, because if it is not 90 degrees, then they will not have inverse slope. And for it to be valid, they should have inverse slope, because it is made up of a bi and a sell function. Okay, so they should have inverse slope at angle of 90. So they should intersect at angle of 90 so that they will have inverse slope. So the one pointing up is positive slope, the one pointing down is negative slope. Okay, so you are going to have many of these points with their output waves like this, as I'm going to draw it. Okay, with the output waves, this thing happen at different, like you see that the timing, the time interval between each of these localized point with their wave output is not all that big. They are very short distances. That's why when you place a trade, it will jump into profit and suddenly it will go back to loss. Okay, why? It's because of this idea of vector algebra. Okay, you see how the market is floating with these directions, different directions. Okay, now a vector algebra is trying to tell you that the signal S, we are going to use dollar sign as signal to differentiate it from self signal, is equals to, okay, the S self signal plus buy signal. We are going to measure the slope of this algebraic summation, this vector algebra. When you measure the sum, okay, when you measure the slope, if it is positive, you look for a buy signal. If it is negative, you look for a sell signal. But the general rule of thumb is, if the slope of the analytical channel is positive, then look for a buy signal. And if the slope of analytical channel is negative, look for a sell signal. And then you can only be selling if the rate of change of this is 0. At any point where the time derivative of the time derivative of this, like the time derivative of the signal, the vector signal function, the time derivative, if it is 0, then, like, if it is 0 and this channel direction is positive, like this, the slope of the channel is positive, you look for buy. You buy at that instant. But if the slope of the channel is negative, you sell at that instant. But make sure that the direction of your entry signal, the direction of your entry signal is in alignment with the direction of analytical channel. So for a positive sloping analytical channel or uptrending analytical channel, you are going to be buying only, even though there are sales. You are not going to take those sales. Imagine you are selling in this channel. How will you feel when the price is already up there? You have lost as much as you can. They say sell at a high price, right? Then you sell at this side, then price came and break it. You sell at another high price, break it, and it will be hitting your stop losses, because you are putting your stop loss where your take profit is supposed to be. If you trade against analytical channel, then your take profit will be where your stop loss will be. Meaning that you will not take the profit, you will take the stop loss, meaning that you will lose, right? So this is cool. This is pretty much cool, man. But I'm not going to go deep into the differential calculus part of this and energy analysis part of it, like the market dynamics, which involve energy study, energy distribution, and all of that. Well, the truth is, if you want to go deep in this market, you leverage the effort of successful trader, you enroll for my courses, mentorship, you subscribe to my VIP signals. But if you feel like you want to be your own boss doing this, you must learn it. You need discipleship, you need mentorship for you to go far. But if you feel like this thing are just troublesome, like you are tired of learning, then you use our signal, copy and paste our signals in real time, and that's what you need. So we are going to Forex market to see these vector algebra applications. Okay, that's cool. Right now I will have 𝑧USD. I'm happy that I'm going to open 𝑧USD. There is reason for that. There is reason for 𝑧USD to be used in this analysis, because if you understand this idea beforehand, you should have been making massive profit from the ongoing bull market on the good asset, ongoing bull market on the good USD asset. Okay, so now look at this market. First of all, select your analytical channel. I'm going to upgrade the time frame to hourly time frame so that we can get bigger signals. Okay, so I have selected this, right? So every analytical channel is extensible so long the price remain within that channel. Are you getting me? So let's assume we allow it to be here. Okay, so that's good. And then we draw our parallel and then allow it to be here. Okay, so this is our channel now. The boundary should be of the same length. Okay, so this is it. Now when you look at this channel, okay, you will notice that it is upward, so you look for buy. Now there are many theories here, there are many rules here which I may not be able to state, but I can state the ones that is needed as I progress. What you are going to do, because there is a shift from the channel, is not trying to tell you that analytical channel is no longer working. It's trying to tell you that there is a shift in channel. So you shift your channel. You can possibly increase the length of the channel as price move away from the, like as price go beyond the channel, so that you will get the real result. Okay, so when go to drop to this lower channel, you have to expect a point. Like this is localized point, and these are called in the beginning I said localized point, but you can just call it swings. These are called swing. So you localize this swing, you localize this. You believe most time you don't assume, or you don't wait for it to just happen, but you localize it by a valid mathematical method. Maybe if you see where there is a swing, and the valid mathematical method I mean here is zero differential analysis and energy distribution, right? So you can come here, because there is a swing here, then you extend the boundary of that swing. So if price is coming towards this zone, even if it's not touching it, or even if it touches more, or even once the distance between the current price and this zone is not greater than the zone width, you can take that trade. So if it is here, so the distance between here and the boundary, because you have to use the nearest boundary in this analysis, so it is 4.5. so you take that trade. Imagine you have hold good all the way from here to here. You should have made over 700 pips, right? Trading one lot size, that will give you about $7,000, meaning that if you enter this trade there with a $100 account, you should have made $7,000 plus. Or using high level differential analysis, zero differential analysis, you should have added more position, and market dynamics will also help you to add more position. Like you deploy other tough trading methodologies that are working, which are within my channel. Okay, you should have deployed that, and you should have maybe converted the $100 to maybe $50,000. Okay, because if you hold a trade, let's assume you place the trade here, and then you place it here, and then you hold it here with one lot size, you are making $3,900, right? Now, because of the energy distribution here, like price cannot break this level. This is zero differential zone. Price cannot break here. Because price cannot break it, you want to risk your $3,900 because you believe that price cannot come towards here. So if you enter here, you are risking 15 points or 140 pips to target here, because this price is continuous and it's going up to target 400 pips. So you can, based on 15 pips, this 150 pips, if you use one lot size, you are risking $1,500, and because you have almost $4,000, you'll be like, I want to use two lot size. So when you use two lot size, by the time the market have reached here, you have made, because this is almost 400 pips, then if you convert it to profit, you must have made $8,000. Okay, and the one lot size, initial one lot size you started with, would have gone by times 2 or more. and then you'll be seeing around $20,000. Okay, so what if this zone was minimized, like you optimize this zone to a very tiny level, and you'll be like, it's not going to go against you by 4 points, meaning that your risk reward is 1:10. So if you risk all the $3,900 and you get times 10 of it, you are going to make around $40,000 plus the loss size, the one lot should have plus the profit the one lot size should have given you. You are hitting $50,000. That's what I mean by saying you should have made $50,000 if you deploy higher level analytical method. Thank you. Make sure you keep subscribing to this channel. Make sure you leverage the effort of successful trader, which is WINFX Trading channel trader. You really need to subscribe to our VIP if you really want to go far in this game, and you really need to learn, be educated by our mentorship and courses depending on what you wish. The course is short term, the mentorship is long term. Okay, so long term you get more, short term you just have limited time to learn and ask your question, but long term you learn more, ask more questions, and you get assimilated, you get discipled, you get trained, you become driven, like profit driven in this kind of industries. Thank you and bye for now.